Well, it was sort of a little unexpected, but it's been a very interesting few days on the markets. In particular, it sort of seems to be gaining greater prominence as people pick up that there's some unusual instabilities in different markets around the world. Today, the Australian dollar plunged against other major currencies, falling to an 8-month low against the US dollar. I was one of those who was going, 90 cents US, please, please. But it's dropped back. Looking at my finance screen now, it's 83 cents against the US dollar. Today there's been a massive sell-off with ongoing concerns about Europe's debt crisis driving investors away from currencies perceived as a higher risk. Now, just why Australia's dollar would be a higher risk is beyond me, but there you go. The share market's taken another hit today with stocks losing, I think it was 1.6%. The All Ordinary slipped about, doesn't matter, it slipped. There's a number of interesting things happening around the world, so I invited my honorary unpaid financial advisor to the evening program, Chris Leithner from Leithner & Associates, to join me once again and perhaps give some background to what's happening. Chris, thanks for coming in once again.
Thanks very much for having me.
Some significant stock market instability at the moment, both here and overseas. Well, not really here, but it's certainly sliding, but overseas on the European shares.
True. People are catching up with the notion that not all is well in the world. Roughly 12 months, 18 months ago, politicians in effect stood up, much like George W. Bush did on the aircraft carrier, and said, economically, mission accomplished. Don't you worry about that. There have been problems in 2007, 2008, but thanks to our interventions, that's all been sorted. There are blue skies ahead now. I exaggerate slightly, of course, but they gave the impression that massive government intervention could resolve the problems caused by decades of government intervention. And it seems to me that slowly but surely people are coming to the realization that government intervention makes those initial problems even worse. Problems in the banking sector were swept under the rug, namely under the government's rug. Governments vastly increased their debt, and now people are beginning to think, or beginning to realize, goodness me, governments are heavily indebted, and what we thought were very safe investments, namely government's bonds, in actual fact, are not nearly as safe as we thought. So in other words, nothing much has changed. The underlying causes of all of these problems continue to stare us in the face. And as people begin to confront that reality, one sees instability in stock markets, bond markets, and so on.
The Greece or the Greek bailout money or the EU bailout money for Greece is greater than the entire Australian economy. And that's just to ensure that Greece doesn't default on its loans, let alone stabilising the wider European currency, the euro.
Initially, there was great euphoria. Many hosannas were sung, $1 trillion US or the equivalent thereof in very rough terms. And people would think to themselves, gee, that's a gargantuan amount of money. But then after several days, well, from where comes this money? And the first answer is that it's conjured basically out of thin air. It's not as if $1 trillion or thereabouts sits in the vaults of the European Central Bank. So that's point one. And in effect, more funny money has been created to address the problems of existing funny money. Point two is that technically all of this is illegal under various sorts of European treaties. So various subterfuges have been followed. They're called, basically off-balance sheet sorts of investment vehicles, which governments denounced about 18 months to 2 years ago when Citibank, American, British, and European banks used those same sorts of underlying structures. So
federal governments are doing what they denounced companies for doing in the in the lead up to the global financial crisis.
The underlying structure is very similar.
Okay.
And it's the old story that allegedly when private sector people do it and becomes unstuck, woe betide them, and politicians stomp their feet and denounce them. But there exists some bizarre parallel universe or parallel law of morality whereby governments, without blushing or without batting an eyelid, can do precisely the same sorts of things, and people are supposed to applaud them for their efforts.
Germany has banned short selling, and that has made the markets even more jittery. They were expecting it would calm people a bit in Europe, but it's made markets over there more jittery.
Well, if one doesn't want person B to receive bad news from person A, one will say, let's put blindfolds or let's attach earmuffs to them. We'd laugh and say how absurd and silly that is. The Germans now, like Americans did, like Brits did 18 months to 2 years ago, denouncing symptoms, that's to say actions of speculators. They're refusing to address underlying causes, namely that governments have lived well beyond taxpayers' means. And so to address the alleged source of this problem, problem, which isn't the source of the problem at all, the actions of speculators. They are banning certain actions by speculators. The trouble, though, is that speculators are like the ugly little fish that eat up the stuff at the bottom of the aquarium. They're ugly and so on, but you got to have them in an aquarium to have pretty colourful fish and so on. And governments are making fools of themselves. So in other words, one can ban X, one can ban Y, one can ban Z. It's as if there's some sort of a problem. Look, there's a problem with murder, we're going to ban murder, as if that's going to resolve the problem. Certain types of people don't like certain types of activities, will simply ban it, as if suddenly, by passing a law, by passing a regulation, that's going to suddenly make the problem disappear.
Here in Australia, our currency, by my calculation, has slid around 4 cents since the announcement of the federal government's super profits tax. It's roughly around 4 cents. Are they connected?
Many things economically are interconnected, so the short answer is yes. Exactly how they are connected, that's a more difficult question to answer. But
I'm not going to ask that one.
That's right. I've been surprised, I suppose, and in my middle age I shouldn't be surprised by much, but getting that way I am. A government which, by and large, does not consult with big elephants. When those big elephants become stroppy because they haven't been consulted, they're going to say and do certain types of things. When those said elephants are sufficiently big, people around the world take heed and listen, so that suddenly Australia risks having the reputation of a country that's not particularly has not rolled out the welcome mat to miners. Now, if that's something in which you specialize, if that's something which you do better than most people in the world, you have to think twice whether you want to do such things.
All right. Now, the currency has slid 4 cents since the announcement of the super profits tax. Does that mean there has been some level of flight of capital out of Australia?
Not necessarily.
Not necessarily. Okay.
The underlying demand for the currency, which might have been predicated on people thinking, gee, Australia's production of iron ore, of coal, etc., is going to be at such and such a level. We anticipate that, and we'll buy the currency. Why? Because those exports will eventually strengthen the currency. People would anticipate that in order to earn a profit. If they're now thinking to themselves, well, gee, given this mooted super profits tax, given other sorts of developments, we're no longer so sure that's going to occur. The Australian dollars, which they might otherwise have bought, they're no longer buying. So the demand has fallen. Falling demand implies a falling price of the dollar.
But it doesn't necessarily mean a flight of capital out of Australia.
That's correct.
Okay, all right. There's a possibility of a real estate bubble in China. It seems like Australia is actually being propped up by China more than anything else at the moment in terms of mining. If not deeper problems in the very hot Chinese market, is there any? If it is a real estate bubble in China and that bubble pops, are there implications for Australia?
Well, certainly, and not just real estate bubbles, but investment bubbles of in various sorts of areas, in manufacturing, banking, and elsewhere. Basically, what's occurred in China is a magnified form of what occurred in North America and in Europe over the past 15 years or so. The creation of funny money. Where does that money go? Into things such as real estate, into expansion of factories and so on, in order to manufacture the things which Americans, by and large, cannot afford to buy. That sort of relationship now hasn't broken down, become strained. Americans realize, gee, they're not in nearly as robust economic health as they had been led to believe, but in China still geared towards that. Folks who say, oh, but they can reorient their economy from an export-oriented economy towards a domestic consumption economy. That's something which can occur, but that takes decades rather than mere years.
Right.
Now, if it's the case that the Chinese have committed some of the same mistakes that Americans and Britons and others did, that's to say, vastly expand lending, live beyond their means, overinvest, then they have an analogous, not identically, but an analogous reckoning that Americans have had, that Britons have had. That's right.
And the trick is always guessing when that may be.
Precisely right. And then the implications, as you raise for Australia, as you've pointed out, Australian exports are headed more and more towards China. More and more of Australia's export income derives from there and from Asia more generally, which, by the way, people in the stock market are beginning perhaps to second guess and to say, is this a one-way bet? Can China go only upwards? If it's not the case that China can go only upwards, then perhaps people will reconsider, rethink and reprice the value of assets.
My guest is Chris Leithner from Leithner and Associates. He's my unpaid occasional financial correspondent. I asked him into the studio to answer some different questions when we need to know things of what's happening with the market here and around the world. Is it important for a nation like Australia to have a high level of personal savings, like for the Chris Leithners, the Steve Austins, the John and Mary Citizen, to have a high level of personal saving?
I believe it is, and you've put the question, I think, in a very good way. That's to say, it's important for each individual household to have a high level of savings. What does savings provide? It provides exactly that, a nest egg. It provides a reserve against vicissitudes, against untoward occurrences, and so on. But as each household increases its saving or develops savings, that provides a basis for domestic investment. That's to say, a country is not going to be dependent upon inflows of capital from overseas.
So we can build things so companies can borrow money internally and use it to build factories or whatever they want to do.
Well, that's right. And again, the critical point being that they build according to consumer demand, whether it's consumer demand in Australia or overseas. But the recipe for financial success, the recipe for national success is that households save, those savings accumulate, those savings are invested, and if the investment goes well, in factories, in mines, in services, in whatever it might be, but by savings leads to additional consumption. Okay. Politicians have led us to believe that, we can become richer or remain rich by consuming, and that gets things completely back to front. And they've completely forgotten the point that having a domestic source of savings, it seems to me, provides that margin of safety, that cushion. Now, by and large, English-speaking countries don't have that margin, and it seems to me that's one of the reasons that they're in a real pickle at the moment.
All right. Does the same apply for national governments? Is this debate between the government and the opposition about paying off our debt,
yes,
whether it's not in 3 years or not, doesn't matter. But does it matter? Does it really matter?
Well, ask Americans now. Americans are coming haltingly to the realization that America's bankrupt. So too are folks in the UK. Now, I hesitated when I say that. Certainly the election recently in the UK, there wasn't much indication, or certainly politicians weren't going to come to the realization that the country is bankrupt. What do I mean by that? Politicians have made promises regarding pensions, pharmaceutical benefits, hospital benefits, which they simply aren't going to be able to keep. There have to be cutbacks. Headlines today that in France, certain cutbacks are economically necessary but politically unacceptable. The question is not whether they're politically acceptable or not. It's that an individual, a household, a family, nor can a government live beyond its means indefinitely. Eventually comes a reckoning. And the trouble, though, is that politicians, bureaucrats, economists over the past generation have in effect said, don't you worry about that. In the long run, we're all dead. Let your children worry about that. Let your grandchildren worry about that. The trouble, though, is that those problems have come home to roost.
I'll speak with you again. Chris Leithner, fascinating. Thank you very much.
I look forward to it.